For some who are well-positioned, a recession might be the chance of a lifetime. Making the right decisions might land you in a prosperous situation for the rest of your life and bring money to your family for generations. For many who are unprepared, this means facing impending financial ruin in order to survive. Make sure to watch the entire video, since a few additional minutes of preparation on your side might result in a once-in-a-lifetime cash gain. In a much better position, you should understand exactly what steps to do. It's natural to be anxious during a recession, and being a bit wary can't harm. But you shouldn't allow hearing about a possible financial catastrophe ruin your long-term strategy. You must be ready for bad times if you're committed to building wealth. Focus on your long-term objectives, what you need to be doing right now to stay on track and have a clear head. It's normal to experience financial setbacks from time to time when building wealth. Therefore, you shouldn't let this deter you or surprise you. When you feel like you just are not making any progress, one idea is to measure your development over time on an annual, biannual, quarterly, or even monthly basis. By looking back at your data, you'll see how you're developing even if it doesn't seem like it. One thing is certain: when you pay off debt, it's like investing money with a guaranteed return. For example, if you have $500 to invest in the stock market or pay off a credit card debt with a 30% interest rate, choosing to put that money toward your credit card account will result in a guaranteed 30% savings. A guaranteed profit, a guaranteed savings, is something to take into consideration as opposed to investing that money in the stock market, where you may gain money but also lose it. What can you do right away to build up a sum of money that is ready to be invested when the chance arises? In addition to a typical 3 to 6 months emergency fund, this additional cash will act as an extra cushion if a catastrophic calamity strikes. This is an excellent time to host a yard sale or clean out your garage and sell any stuff that is just taking up space. Do you possess any talents that you might employ to make a little additional cash in your spare time? Spending additional time at work is generally the last thing you'll want to do, but it is something to think about if you can. If you've been paying extra money toward low-interest debt, you might want to try making merely the minimum payment for a bit and putting that money toward savings rather than spending additional money toward your low-interest home mortgage, contributing that to your cash reserve. You won't regret having an additional well-padded savings account during difficult times. Avoiding major purchases or at least delaying them until after the dust has cleared and the future appears more promising is one way to save money. Making significant financial decisions is not a good idea when interest rates are rising, markets are falling, and there are reports of layoffs. Why incur those extra expenses if you don't have to? It's not the greatest moment to start building on the backyard pool you've been planning or to withdraw money from savings to renovate your house. Wait until it is absolutely essential before making any significant purchases. Keep in mind that whatever money you may save right now can provide exponential returns in the years to come. Whenever the economy is experiencing growth, all boats rise, which means that investments of all types often do well. Since the markets are trending upward, even inexperienced stock pickers frequently choose winners, and practically everyone you know is boasting about their real estate and golden touch skills. Only those who make long-term investments in good quality assets will continue to profit, while everyone else will be left wondering what went wrong. Analyze your retirement funds, other investment accounts, and pay special attention to the specific investments you are making. Let me know in the comments if you have any other questions about investing. Let's return to the video. Which stocks or funds in particular do you intend to invest more money in, and which do you intend to do so quickly? You'd be shocked to learn how many individuals regularly contribute to 401k or IRA accounts without knowing what they're truly purchasing. Stocks of excellent firms frequently trade at a discount during recessions because the market will value them negatively owing to anxiety. Investors occasionally withdraw money from the market as a result of their fear of what the future may contain, which lower prices. While it is unrealistic to expect to successfully time the market, now is an excellent time for long-term investors who are willing to take advantage of these significant discounts. Investing available cash when stocks and funds have experienced significant price drops is a great way to potentially increase your returns. Although stock prices fluctuate, you might want to avoid buying them separately. Focus on purchasing high-quality index funds and ETFs to lower your risk of losing money because they have a higher possibility of recovering at a lower risk than individual equities. And cryptocurrencies. There are several varieties of a fund like this, and even a fund like the S&P 500 might be bought at a large discount. You can pick an S&P 500 Growth Fund, S&P 500 Dividend Fund, or S&P 500 Value Fund, among a wide range of their options. Do not feel the urge to branch out and investigate high-risk options with retirement funds, since the potential reward with these options is enormous. Affluent individuals are aware of the value of having a lot of money on hand, so they can take advantage of these incredible market opportunities, which is one of the reasons why the rich continue to grow richer. Your gains will increase significantly if you're prepared to take advantage of these fantastic possibilities, but don't expect to use that money anytime soon. You'll need to wait for more than 3 years for the market to stabilize. Otherwise, you might just raise your monthly investing contributions rather than choose when to put more in the market. Dollar cost averaging is a hands-off, mindless strategy that can nevertheless let you benefit from those reduced prices without making you feel overwhelmed by market volatility. A recession may present an opportunity for real estate investors who have been holding off. Uncertainty can frighten other investors and keep them from investing in real estate, resulting in a better entryway for those looking to get in. People who were previously financially successful may suddenly discover that they need to sell. Even while real estate prices don't usually decrease significantly during a recession, there is a greater likelihood of finding a desperate motivated seller. Demand for rental houses may also rise for a variety of reasons. Not all firms will suffer merely because the economy starts a recessionary phase. Many firms, especially those in non-essential industries, will witness a drop in value. But there are those that will prosper and perform better than before. Similar to what we saw during the epidemic, where some firms folded and suffered financial losses, while others experienced phenomenal growth. The owners of these companies will amass enormous riches. What kind of side hustle may you create that people will buy regardless of the economy, or even better, one that will succeed in a bad one? Use your expertise, passion, and talents to select a business that might help you make money during a recession from among the many that people need, whether or not the economy is booming. These include various home services, automobile services, pet services, and items. A recession presents an opportunity for you and your family to accumulate long-term wealth, but only if you made the necessary preparations. Since these chances don't arise frequently and continue for very long, planning ahead is essential. Making the right decisions in these unpredictable and difficult times will pay off for you in the long run. Hope you have learned something from this video. What are your thoughts? Comment down below. If you enjoyed this video, make sure to click the like button, and also don't forget to subscribe to the channel and hit the notification bell for you to be updated on our latest videos. See you in the next video. Thanks for watching. Want to learn more and be more financially literate? Click on the next videos we have in our channel, showing on the screen right now.